Robinhood has introduced a whole new genre to investing and thinking about their future and learning the hard way. Some have experimented with options, and it doesn't take long to lose a lot of money with options, and they learn quickly. So I actually think Robinhood has done a great service to the investing community. Well, as you know, Brian, we report our trades for the ETFs at the end of every day. So we picked our spots when Robinhood came public. It fell to earth, and we picked our spots at that time. It's roughly a 1% position, and we're watching it. We're looking at the payment for order flow controversy. We know that Chairman Gensler at the SEC is looking at that. That's a large percentage of Robinhood's revenues, but we actually think that not much is going to change there because the system has been so good from an execution point of view for the end investor. So we'd be surprised to see a lot change on that front. But again, we're in a situation where we have to listen to what the SEC is saying. Yeah, I'm going to give a shout out to Tom Lee from Fundstrat. He picked up on a study that Stan Salvigson, who was the chief strategist of Merrill Lynch in the 80s, when I was just coming of age in this market. Stan had a hypothesis that the baby boomers would make for 15 to 20 years of a bull market in equities. And that's what happened. It was a very simple assumption, and it played out beautifully. Tom Lee, I don't even think he referenced that study, but has taken the notion that millennials are the reason we're in a bull market for equities, and that this leg of the bull market won't end until 2026. And I think he thinks that the bull market, with some fits and starts after that, could actually extend to 2038, I believe it is, which is the year that the number of millennials peak. So this is the echo of the baby boom. I lived through the baby boom years and that equity market move. It was magnificent. It was a very simple assumption, and it worked. And I do feel we are in the same place now.
Do you have confidence that Robinhood could pivot its business model and still innovate and make money like it has been?
Yes, we do. Robinhood is all about the user experience, and we've been very pleasantly surprised at how many young people it has invited into the world of equities and options and so forth. I remember when my children were in high school and college, very few of them or their friends had any interest in the markets. But I think Robinhood has introduced a whole new genre to investing and thinking about their future and learning the hard way. Some have experimented with options, and it doesn't take long to lose a lot of money with options, and they learn quickly. So I actually think Robinhood has done a great service to the investing community. I think KYC, AML, so know your customer, anti-money laundering, is good for the ecosystem. I do believe that is true. I think what's confusing from a regulatory point of view is the different definitions of crypto depending on the regulator. So the SEC, in terms of Bitcoin, has described it as not a security. The IRS says it's property. The CFTC says it's more like a commodity. And I think if regulators get together and agree on what exactly these cryptocurrencies are, how to define them, that will be a good thing. Just certainty will be a good thing for this ecosystem. Analysts and portfolio managers felt they were taking a huge risk investing in a stock that was not in an index. Well, guess what? A lot of innovation which is all about the future, is not captured by indices. In fact, very little of it, we believe, is captured by the indices. And so I felt starting a business on that premise to focus exclusively on disruptive innovation would become productive. And it has, because we have never been in a period ever in history. First of all, let me just finish up on Robinhood. They have pivoted already to crypto in a magnificent way. So just wanted to finish that one up. Bitcoin in particular is a new global monetary system. It's a rules-based monetary policy, which is completely decentralized and therefore is not subject to the whims of policymakers. In fact, it's a hedge against the whims of policymakers, especially in emerging markets. And as far as other crypto currencies, Ether being the biggest, we're seeing the DeFi movement, decentralized finance. Again, Chairman Gensler is going to take a close look at it, which I think will be good. Let's just get the regulators on board, because at the end of the day, what we think decentralized finance is doing is taking the friction out of a lot of financial services and taking a lot of the middlemen out of financial services. So that is also a good thing. Other than that, there's some. I don't know how closely John Paulson and some of the other naysayers have looked at it, but I know there have been conversions. Ray Dalio has been a conversion, Stanley Druckenmiller, and these are very thoughtful investors who at one point thought Bitcoin was a Ponzi scheme, and in some cases, and have been converted. And I think one of the reasons they have been converted is when you think about what blockchain technology is doing, it is putting into place via the internet the payments ecosystem that was not put in place in the early days of the internet, because it was never conceived with commerce in mind. It was for defense departments and intelligence. It was for academics. It was for information exchange, not commerce. When you fill in the picture with blockchain technology, all you're doing is saying, yes, there's a more efficient way of doing commerce. We just didn't know commerce was going to be a part of the internet in the 80s and early 90s.